Good morning, everyone. This is Dave, aka drebg, senior member over at informedtrades.com. If you haven't been over to Informed Trades, I welcome you to hop on over there, take a look, poke around. Everything is free. Lots of great traders, lots of great information, and I know you get a lot out of it. What we're looking at today is the pound-dollar chart on a daily time frame. I'll show you a trade that I'm currently in, why I get in, where my stop loss and targets are, and how we found the setup. Just to briefly give you an overview, this dotted line down here is the 200 EMA, which I'm pretty fond of. This is the 8 EMA, and this is the 20 EMA. What we're looking at is this area right here recently, just set up last week, where we have a false break pattern. I'll show you how I looked at that, what I saw in it, and then why I went short where I did. First things first, here's the weekly chart. We have to put some support and resistance lines in. We'll find some around where price action is now, around 157-ish, and a few more that we'll put in, but we don't have to put too many. My rule of thumb when putting support and resistance lines in is that if it takes more than about 6 or 7 seconds to draw the line, it's not important enough to draw. So I'll show you how this came out when we put these back in. So here's my weekly. I'm going to take it back down to a daily, and you'll see a little bit better of where my support and resistance areas are with these orange lines. When you're doing this type of trading, it's really the most recent week or so that's going to make the most difference in your current price action, unless you're truly swing trading over a very long period of time. So I only have 3 support and resistance areas in here, and that's it. I'm only worried about the area that we're currently trading around. So the next thing we're going to do is we're going to mark off what I saw in terms of this false break pattern. What I saw setting up last week came off of this pin candle on the daily close. This pin is huge. We're also in the direction of the general overall trend, which is down. So this would be kind of a trend continuation pin candle. What really struck me though is that if you look to the left of that candle, we have this big mother candle, this big bar here, this green bar up, and then we have an inside bar. Now that you can see this mother bar, and you can see that this next bar is an inside bar, what happened was price action went straight up above that mother candle. Everyone started hopping in long, and it reversed back down. The big players sold into that pressure, and what you're left with is people getting caught long. Let me mark off the inside bar and I'll show you what I mean. So here we are with this inside bar marked off in blue, and the mother candle marked off with these pink areas. So what happened was we went above the mother candle and the inside bar, closed well below it on a pin candle, which a pin again by itself is a pretty strong indication that something's happening. What I did is I waited until we retraced back up the pin a little bit, and then I got short on this first green line here, which is my short entry. My stop loss is above that pin, and my target is down here somewhere around the support and resistance area, which I'll put back in. Do you see how that this pin candle becomes even more important, because we can see now that it breached this resistance area but couldn't stay above it? In fact, if we go back, we can see a series of other pin candles back in August that make this area pretty strong. And when you consider this as a potential downtrend continuation pattern, it makes it even more high probability. What we're really talking about here is high probability, low risk, good risk to reward ratio trades. When we run the numbers on this and we calculate stop loss, that's 80 pips back, and the target is 130 pips down. That's better than 1 to 1.5. Now I usually like to look for 1 to 2 or 1 to 4 or 1 to 3, but in this case I'm certainly not going to complain, and I have room to carry that target down to the 200 EMA or farther. Now if you're having a hard time to see these setups where we have a mother candle, an inside bar, and then a pin candle breach above, I'll show you a quick tip that I use from an indicator standpoint that helps identify those. You can now see that I've color-coded any inside bar with a blue line down the middle. Now you can notice what an inside bar is by yourself, but when you're analyzing a lot of different pairs for a lot of different technical setups, sometimes it's just easier to bring your eyes directly to something and then analyze it, and this is what this indicator does for me. It allows me to see, hey, look, there's an inside bar that has formed. What does that mean in the general context of everything else? What does that inside bar really mean relative to where you are at the moment? Now, I have to be a little careful. You have to keep this in context. This is a Sunday bar. FXCM plots their Sunday bars. A lot of brokers don't. So you need to be a little careful. A lot of times when we have these little tiny candles, they're really representative of Sunday candles. The entry here is typically to wait until we have a return roughly halfway up that pin, and then enter short with our stop loss above, and then of course the target somewhere down below. Sometimes you wait until there's a breach of that inside bar and do a sell on stop order to carry it down to wherever your target is. In this case, I wanted a little better risk to reward ratio. You can see that if I entered on stop here, ideally your stop loss should be above that pin. That's 210 pips back. For a 1 to 1.5 risk to reward, I need 300, and that's well below what I'm seeing on this chart right now. I'll bring this down to a lower time frame to show you why I entered a second time. So here's an hourly chart. It's the exact area we were just talking about. You'll see that the mother candle is again still marked in pink. This represents the daily candle. And then the daily candle that was the inside bar is marked again by these blue lines. And this up and down is the breach of this resistance area and the pin candle that we talked about. What I did was I waited for price action to retrace up that pin and then got short right here. When I got short a second time, I did so because price action went against me a little bit. I shorted again right here, and one thing you may notice is that I shorted here, but that price action is way up here. It so happened that the spread at that time was like 16, some crazy number. I don't know why. I didn't even notice. I probably should have, but I just was really interested in getting short again because I know how powerful this setup can be. So the net short is right around our 150, 650 level. And as you can see, currently we're at plus 84. We were at plus 97. So we're getting very close to our target down here. Here's the 200 EMA on the hourly. I think I'm going to let this retrace back up a little more. Maybe get up to this resistance level and let it come back down again and move my target down. And then maybe move this to maybe plus 10 or something, just so that the trade can run. So let's recap briefly. Here's our blank chart. We're just looking at price action. There's no indicators except for a few moving averages. We know we're in an overall downtrend. We see this huge pin candle form. We look back and say, wow, this is just after an inside bar, and here's a mother candle. What if we could retrace and then look to get short for a target down below with our stop loss back here? The first thing you want to do is make sure you put in your support and resistance areas. Now it looks like our pin candle formed right around a support and resistance area, and we can also set our targets somewhere around another support and resistance area. If we then mark off the mother candle, the inside bar, it gives us a better perspective of where price action is relative to those closings. And we're now short a second time after price action ran up on us a little more, so that we have double the trade, and we can get out of half of this trade now for profit and move the other to break even, or just move them all to a little more into the profit area so that we can lock this in and let it ride. When we shrink the daily chart up a little bit, I think if we put another support and resistance line in here, obviously this looks pretty solid to me. It's just below the 200 EMA. We have some resistance here, we have some support here. This may actually be a good place to set that target rather than way up here, and then maybe move our stop loss down to a little better than break even. Let's do that now. So now you can see that I've changed the stop loss to plus 20. You'll note that my net short here is in between these two green lines, which is at 156.51. So I'm 20 pips plus on the profit side for the stop loss. So that's regardless, I got two half lots making one full lot at plus 20. So there's $200 locked in, and if this thing does carry through to that new target, we're looking at plus 240 right down to the 200 EMA. So I'm pretty confident and pretty happy with this. The worst thing that happens is we're up $200. If I get stopped out, there's no reason why I couldn't re-enter if I wanted to, and I'll just manage it on the way down and see what happens. I'll keep you posted. Thanks.